You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, let's hit it. Let's hit the old option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network. Welcome to the show. If you're joining us live, welcome. You can do so every Monday and Thursday, noon Central, 1 p.m. Eastern, via that Mixlr link. Or if you don't feel like signing up for another social tracking listening service, I get you. You don't want to sign up for make another account somewhere. Just follow us on social media. We put the link out, and then you can grab it, listen to it on your platform of choice. Don't need to be a subscriber to Mixlr, even though it's free. You don't need a subscriber to listen. But if you do, you can get notified with all the cool stuff we got coming your way. A lot of stuff hitting that feed this week. We talked to a bunch of people coming through the studio this week talking about things like how to get Bitcoin up to speed and blockchain so you can actually trade it like a real financial product. Right now, I think you can handle somewhere around 3 transactions a second, trying to get that up to thousands of transactions a second, which are really required, if not more, in the modern financial landscape. So things like that are kind of interesting. The plumbing, the infrastructure. We're all talking about, let's get Bitcoin options and things, but adding more products kind of exacerbates the problem before you fix the underlying. It's like a Jenga tower, but you're ripping all the blocks on the bottom and you're putting more stuff on top. It's not going to last too long. So maybe getting that stuff up to speed, to scale, is kind of interesting. We talked Asian options recently, talked a bunch of other fun stuff going on. Check out the interview feed if you haven't done so already. Follow us on the Mixlr so you get notified for all this cool stuff. We did the advisors option yesterday, talking all sorts of cool stuff about the wheel. Actually, Uncle Mike even joined us because he inspired our wheel discussion. So he dove into the wheel, answered a bunch of your questions. So long story short, a lot of stuff hitting that live feed as well, but it goes up there first before it goes up on the network. So you kind of get a little bit of a preview before it goes up on the actual network itself. Then you get, of course, if you're a subscriber, don't worry, you're not missing anything. You're getting all the fun, juicy, edited, beautiful podcasts coming your way. But the live stuff, let you listen, have it in your ear holes before anybody else. It's cool stuff. Mixlr.com/options. What is our URL? Options-insider. There we go. Check that out. Set it and forget it. All right. Speaking of Uncle Mike, let's bring him on. Uncle Mike, sir, been talking to you a lot this week. How go things? How was your sojourn into the realm of the advisor's option this week, sir?
Before I get to that, never before in the history of the entire stock market has there ever been a better time to sell than 1 second ago when we were at the all-time highs. And this is what the exciting thing is about being on the show this time of day. We can actually give you live market commentary and actually broadcast live when we make new all-time highs in the market. So before I even get into that, I could not resist getting into my take on the market even a little bit beforehand because it's that exciting of a day. In terms of the wheel, it is a great thing. I really enjoyed being on the advisor's options. I'm always happy to be on TWIFO. So me and Mr. Longo have talked to each other a lot in those last couple of weeks, and it's been a lot of fun.
You're getting a glimpse into the life on the other side of the microphone, sir. So I know it's terrifying, but don't worry, it's only a small dose. Then you can go back to your normal life, and you'll be none the worse for wear, hopefully, unless you put you really through the ringer of a lot of shows. But we'll spare you from that. Like for example, you don't have to do TWIFO in a little bit, so you're good there. All right, and also joining us via the magic of the interwebs, somewhere out there in the hinterlands of Maine, right on the coast of Maine. You look at Google Maps. You see a whole lot of nothing. Then there's a little dot right there somewhere on the coast where like one person lives, and it's him. It's the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir. It's been like a week.
Has it been a whole week? Has Sebastian actually been, showing up and doing the show on time?
I'm pretty sure he was on Monday, so yeah, that would be about a week.
Holy gosh!
Yes, oh my gosh. Yes, glad to hear things are going well there in the Rock Lobster land. Or perhaps not so much in this case, because we didn't hear anything. But we'll keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. What is trading? As Uncle Mike alluded to, we are flirting with some highs out there. Most of the major indices well into the green today. Dow up 1%. The S&P a little bit shy of that, about 0.8%, and tech-heavy NASDAQ up a little over 1%, 1.1%, making S&P the laggard on the day, unless, of course, you count its inverse out there, Mr. VIX, which is off about a quarter of a handle at 11.54. We did dip earlier in the day in VIX cash, that down to 11.31 out there as well. All this green showing people apparently thinking maybe trade war. What trade war? $200 billion in additional tariffs? It's nothing. It's dust blowing at the front of a hurricane here. Of course, our old friend VXX continuing the erosion dance as well. Down into the 26 handle again. I haven't seen that in a little bit. Off about half a handle. 26.62 right now out there. Since Uncle Mike is so excited, we got to let the man off the chain first. Mr. Uncle Mike, sir, you've been chomping at the bit, waiting to say this on the show here. So you've said it before. If you want to say it again, you can. I'll allow you. I know you get excited about it. Then what's catching your eye in the midst of this maelstrom of all-time highs, sir?
Yeah, I can't say it again because it's not true anymore. We're down a half a point from the all-time high. I mean, I can't say it now.
Might as well pack up the whole thing and go home. It's done. We're over. We're done. Everything's done. We're going to cancel the accounts. There's no point anymore being in the market.
Yep, just get whatever money you can and just put it in a strong box and move to Maine. That's probably the best advice I have. No, just kidding. No, today is an exciting day. Primarily, we have technology moving. Apple's up almost $3 on the day. Technology in general. Facebook, it's up $2.64 as I'm looking at it right now, as well as financials. The XLF sector is up just under 1%, and consumer staples are up as well. It's the primary drivers of the marketplace right now. What is interesting to me, and I don't want to steal Andrew's thunder too much because I'm curious to hear his take on it. Market is up, at least the S&P is up 0.8% on the day, and VIX is only down 13 pennies. So curious to hear Andrew's take here in a few minutes on that. Other things of note: metals are roughly flat on the day. And we're at new all-time highs, as I had mentioned earlier. Now, at this stage, all-time highs are always something to where you never know how much further it can go or will it come right back. What was interesting, and I talked about this on the show a little bit last week, but what was interesting about the previous all-time highs that we had in late August, when we pulled back, and I'm showing a low on September 7th, we about touched where the all-time high was back in January, and we bounced off of it. And so we have been rallying over the course of the last 2 weeks. Of course, today was a big gap up to the new all-time high territory, and something just to watch whenever you're at an all-time high. So then, where would support be at this point? Well, it's hard to say. You could make an argument saying the gap that happened today might need to fill, which ironically was right at where the all-time highs were on August 30th. But I would think that right now, from the standpoint of resistance, we don't have any because it's a new all-time high, at least in the S&P. But I think the next mental resistance that we would have in terms of a key number in looking at this would be around the 300 level with SPY or the 3,000 level in the SPX. From a macro level, I think it's trade war, schmade war. No one seems to care. We're fine. But in reality, the trade wars and the threat of trade wars have been in the news for quite a while now. So I'm not sure that the market doesn't seem to care anymore. So it's almost as if the White House is thinking, okay, we have a strong bull market, and we still feel that we'll have a bull market going into midterm elections. And so perhaps maybe they're saying now is the time to be tough on trade because we have a strong enough market to where it's not going to react negatively when we send out the tweets that I'm sure they spend hours collaborating on the best way to send out a tweet from President Trump. Maybe not. So a lot of interesting things going on today, and I will pass it over to my good friend, the Rock Lobster.
Well, Mr. Rock Lobster, I guess Uncle Mike is doing my duty for me. I'm going to go take a break. He's doing my tosses and everything. Mr. Rock Lobster, I think the question Mr. Uncle Mike wanted to ask you really is, and then everyone out there is dying to know, are we in zone -1 yet in VIX?
We are in zone 1, which always brings all kinds of opportunities, perils, problems, whatever. So I will say two things. One is VIX is still declining as the SPX goes up, which is good. However, it is very hard for VIX to go down too fast when the SPX is up almost 1%. So remember, that's like a 16 vol move, and the at-the-money volatility is only 8% in October. So even though the VIX might be a little under 12, at-the-money volatility is like 8%-ish, something like that. So it's hard for that vol to really drop more. So in order for the VIX to sort of drop, we're getting quite a rally. So the second part is I don't know if any people read my blog. I put out a couple blogs a week. Always something tradable and tasty in there. Oh, I can't say that word, but tradable and interesting in there. And but I think there's still a bid for puts as the market rallies. I think there's just I think there's put buying, and it feels like more protective put buying. And there isn't a ton of call selling, meaning, we're kind of rallying in this slow rally, and you're not seeing like the total crush in the out of the money calls. So if, liquidity providers can't really buy calls, but they have to buy a lot of puts, it's hard for VIX really to go down. So I think what's happening is folks want to see how this election turns out and maybe then turn on the afterburners into the end of the year. So, the vol is slowly kind of setting up like that. So we'll see how the volatility moves, but that's kind of how I read VIX. So, as long as VIX is going down and the SPX is going up, it's okay. We're getting kind of that slow descent into the 11 handle in VIX. Like, remember, the bottom is about 9. So for VIX to hit 9, you need that at the money vol to be like 7, which is really, really hard for 30 days out to have 7% vol with an election. So I think any drop in vol at this point is going to be hard. You could see 11 or maybe 10.5, but it's just harder for it to get down there. Because remember, the 30-day forward is looking right now and mid-October, and pretty soon it's going to start to scoop up that it's going to start to scoop up that November election cycle. And when you look at vol per term, that November election is going to start grabbing it, and that'll probably at least halt the easy drop in VIX. So we could see a good drop in the October future. This vol could stay here. it appears that the market is pricing these trade war things as, all the tariffs are basically, okay, if everybody starts playing nice with us and, reduces some trade barriers, we'll get rid of the tariffs. So, originally everybody, I think there was like, oh my gosh, it's Smoot-Hawley number 2. And right now it is, you play nicer with us and we will remove all the tariffs and everything will be back to normal. So how long that takes, I don't know. Right now, it doesn't appear, at least the way the downside curve is for VIX. Everybody's still like, any kind of resolution is at least a month away. So, in case it gets worse, and listen, there's always unintended consequences and things can get worse, but at least for right now, there's still a bid for that 1 month out volatility, and it has not gone away. So that's why you're not getting that super low VIX number with where we are at all-time highs, because that geopolitical nagging question is still hanging in the breeze. And I think when we talked 2 weeks ago, remember the Sith, the bid for vol has not revealed itself. And I think it really was still kind of the trade war thing and sort of how each side took it. And then we did get sort of announcement that they were discussing it again. So, and then all the vol just went poof right out of the bottom of the market. I think that's when VIX was last 14 or 15, and now we're where we are. So technology stocks, Microsoft, what is it, all-time high today, I think, again, or a lot of them are starting to just pick up some steam. So I think I got to be with Tusaw. I am, again, you're always cautiously bullish, but this time, the elections will come out one way or the other. If it's not really a change in the status quo, I think after 2 years, people are kind of used to it. Some people more than others. And as long as this economic growth kind of holds out, we're going to see higher rates. But another thing too, if you're worried, just look at treasuries. We're starting to see real lower treasury prices, although there's a little uptick today, on potentially higher rates or higher rates coming. So, I mean, the reality is, all that stuff is, to me, looks a little bit more bullish. So it makes Mr. Tusaw's case for him, I think, a little bit. That's what I would say.
Is that all you would say, sir? You didn't say much there at all. No, that was still refuse to play with my VIX zone -1. We'll get you there. We'll get you there to the dark side, a little bit at a time, like your aforementioned Sith. We'll get you there slowly to the dark side. It's not a quick process. What is a quick process, though, really quickly here, a couple of things to hit on. First off, we talked earlier on the show this week about some earnings. Still some earnings popping up. We had Oracle and FedEx after the bell on Monday, and our friends at ORATS crunched the numbers for us. They do the after reports too, which is kind of cool. Excuse me. And we were talking at the time, Oracle was a little bit shy of 50, about 49.25. They're pricing in about between 250 and 275, so a little bit north of 5%. And they actually delivered a 66 cent move after this is in the immediate blush the next day after the announcement. So this is post moves. It's up about $1.50 since then. So factor that in if you had more stuff for the rest of the week. But of course, you get that premium crush coming in after too, so that makes it a bit of a delicate proposition. But 66 cents, they were expecting right around 260 on that one. FedEx, they were expecting $7.41. It was right around 255.5 or so. So it was a little bit right around 3% they were expecting, and they actually ended up delivering about 50% more than that, about $12.80, almost $13. So not quite double, actually, but almost out there. So, yeah, a good move out there for FedEx. And right now, how are we looking in FedEx land? Let's see. FedEx is 246.90. So off about 8 handles and change from where it was. So now it's kind of in line with the straddle. But the initial blush was a lot more aggressive. Speaking of more aggressive, we saw some interesting comments this week. Everyone's kind of taken with the cannabis industry in terms of stocks and performance. People have been talking and writing and tweeting about it. People were sharing out there just some interesting charts. I think this was off of, might have been off of Stock Twits, or that's actually was the Journal, comparing the growth in the marijuana cannabis industry to things like 3D printing, their boom and bust, as well as the .com boom and bust. The charts, at least the upside of the charts, we're not on the downside yet in the cannabis, so we don't know. But the upside looks kind of interesting in terms of the parallels and how many days it was. Talking the cannabis right now at about looks like 1,100 days since their inception. I'm not sure when they marked the starting off point for that industry. I didn't create this chart, but still interesting stuff. That's right around the time that the 3D printing phase started to boom and also bust, and also a little bit before, about 100 or so days before we saw the end of that. This is Nortel. Now they're measuring the .com thing just off Nortel. I was going to say 1,100 days. That seems kind of short, but yeah, that's just off Nortel. And then of course people have been sharing this good stuff. Our friend there, the Flow Master Henry over there at Trade Alert, tweeting out he calls Reefer madness, hitting the options markets as cannabis shares continue to climb. Average daily option volume up 40x just in the past month. This is in names like TLRY Core, CORE, and MJ. 275,000 contracts on the tape as of the time he tweeted this. I guess they have an @ganja symbol over there on Trade Alert now. You can search for these names. That's pretty funny. I like that. So a lot of hot stuff out there moving and shaking. I don't know, Mr. Rock, Lobster, Uncle Mike, any of these catching your eye? Oracle, FedEx, or indeed the explosion of interest in just the underlying cannabis industry and people trading it like mad?
One of the guys, Keith Harwood, in our one of the pros in our chat room, he dubbed it the .com stocks, which I thought was pretty clever.
It's not bad, actually. I'll take that.
That
one.
is very clever. I wish I'm going to have to use that.
Yeah,
one.
I may have to borrow that and claim that as mine. So no one listening to that will.
That's why you can actually go search for him. He's a good trader, but I want to give him credit for that. He's like, the .com, the .com stocks are lighting up. Anyway, no, what I was looking at, a $200 stock with a $100 straddle on the close yesterday. And the squeeze is so bad in that TLRY stock that the straddle actually went up. The stock is down $30, wow, and the straddle went up. The put on that 200 strike put was $95. Wow. So there's like a $50 borrow or something in it, or $45 borrow. So I think that worked out to be the annualized borrow is like 500% or something like that. So somebody got too short too fast, and I could just say they're grumpy. So I am sure that lots of people will buy pot, and the pot industry will grow and whatever. And but right now it's definitely the Wild West. So there's no liquidity. So when there's no liquidity and you're a hedge fund that owns a big piece of the stock, you're kind of giggling all the way to the bank, I guess. I would think they'd want to start selling some of it though at this level, because it's worth. What was the market cap on that TLRY stock? I don't know what the hell it's called. Was like more than a good chunk of the S&P 500, like at least half the stocks. So
there you go.
Not bad for a stock with $20 million in revenue.
That makes all the sense out there. Gotta love that. Speaking of names that start with T that don't always make a heck of a lot of sense, let's keep rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, it's Odd Block time. Let's kick it off as you want to do in that other silly T name. Yes, Tesla. It's been a good week. Today, notwithstanding, for Tesla, has been kind of rallying most of the latter half of the week. So go figure. DOJ investigation. It's like the trade war. Just shrug it off. Another day, another headline. Let's keep the rally going. Except for today, Tesla, one of the few reds on our screen today, off a little over two handles, about 220, not quite 1% out there, right around 296. little bit shy of 297 out there. So all in all, a pretty mild day out there in TSLA. That's a name that does 243,000 contracts. Still about $1.43 on the tape already. So it looks like they may be surpassing their ADV yet again. Let's go out to our mystery puts, see if those are contributing to the overall total. So far, at least, our old friends at Jan 2019 50 puts seem to be taking the day off pretty much, about 82 on the tape so far today. So not a ton out there. Worth noting, of course, about nearly 3,000, 2,600 going up on the 18th. So at 800 going up there yesterday. So it has been active this week, just not so much today because OI is reflecting that. Nearly about 33 contracts shy of 73,000 contracts open on that strike. So that strike continues to draw the imagination. 42 going up today on the 10 puts, 27,500 contracts open on the 10 puts, 300 of the par puts going up today as well. 41, almost 42,000 open out there. So if you want OI, this is the place to look. This is where the action is, OIY at least. And it seems like a similar story in the 2020s. The par puts are where the action is today. 168 of those going up. 28,000 open there. 22 of the 50s, our old friend, about 26,000 open there. 53 actually. Of the 20 puts, 18, almost 19,000 open there. Even 25 of the 10 puts. Yes, the Jan 2020 10 puts. Well, 25 going up today. Those are about 53 cents. About 7,000 open on these strikes. So I asked Mr. Meatball earlier this week, I'll ask you too, Mr. Rock Lobster, how many of these thousands of puts is Carmen Line buying this week, sir?
You know what's funny is we did buy a ratio put spread, like a broken wing fly for even money, par 70-20 in January. So it's a little bit of a margin trade, but it has a shower. Like if I could wind it for 50 cents, I'd be happy. So. But that's how many that I'm not telling you how many, but we did do it a little bit just because it was so ridiculous. It was the easiest way to sell the volatility in there that we could find. So we did it. Yep, we did it.
I think Marcus mentioned that on Monday, and I asked him what the strikes were, and he told me what the broken wing was, and it was crazy. It was like 100 handles off. So obviously it's just a margin play at that point. But yeah, it was still pretty funny. That's not broken. That's like severed. That's like a severed wing.
It's actually not as bad as you think because the par 70 takes you to 40, so it's only handled between 40 and 20, which, I mean, I guess that could happen, but it doesn't. I think there'd be plenty of room to escape prior to that. But I'm just at this point now. It's up a little money, so if they just crush the ball a little more in the next couple of weeks, we'll just take it off.
All right. Speaking of taking things up, we're doing the opposite. We're putting things on here and the rest of the odd block here. Let's see what we got in store for us. Kicking things off, our old friends, KKR. Haven't been out here in a while. Trading today, 28.40, up about half a buck or nearly 2% out here. This is a name that does, about 6,000 contracts a day. Today, do about 13,000. 64-1 calls over puts. That brings our Eye of Sauron. When stuff like that goes up, it tends to come across our radar. And what we saw out here was some call love. In particular, not OC, not Nove, not Dees, not the weeklies, not even Jan. Let's let Jan printing a little bit here as well, though. About 3,700, the Jan 26s. But that's not what caught our eye. Nope. It was a whole boatload of the March 30s, at least in respect to the amount of volume that goes up in KKR every day. We saw a block of 6,675 of the March 30s going up for $1.20 right there, smack dab on the offer. As the day has gone on, looks like another 1,000 and change has gone up. Total of 77, almost 7,800 on this strike. OI non-existent, so it's all open in paper. And let's see, earnings-wise, we have earnings on the 25th, but obviously it goes all the way out to March, so it's going to be probably a couple of cycles caught in there. Don't see any stock or anything else that would indicate buy right tag, anything along this line. It seems to be what it appears to be on the surface. Someone liking themselves some a little bit longer-term upside here in good old KKR. So let's look at the old chart and see if that makes sense to us. A year ago, this name was trading way shy of where it is now. It's trading $19, right around $9 shy of where it is right now. And then it's pretty much at the apex of that 52-year chart right now, which is $28. It dipped down to 24 again recently, but now it's back up to 28 and change. So looks like, Mr. Rock Lobster, this one is about kind of what you'd expect in a random odd block. Someone wants some upside, giving himself a little bit more time this time. It's not like these are weeklies. These actually go out to March. So he's got, 176 days on this bad boy. But yeah, near-term upside. What's your spidey sense telling you here on these calls, this call love in KKR?
So what's the number one reason to buy calls in any stock? Right? Crazy leverage. So, you're looking at this thing in April, KKR was $20 and now it's trading 28. So, it's one of those stocks that, it pays like weird dividends because it's basically a closed-end equity fund, or however, whatever they want to describe their buyout thing for. So it kind of goes in fits and starts on paying big dividends and stuff like that. So, and it's just made a power move up. So I think for $1 and change, you can buy a lot of leverage for not a lot of money. I mean, you buy 1,000 shares of that stock, it's going to cost you $2,800. You can buy a 10 lot with a huge amount of gamma for $1.30. So to me, that's the right way to buy calls, especially if you want to be an investor and you want to make lots of bucks. So as a call buy, I think it's a pretty good call buy. So the price is right.
Who doesn't want to make lots of bucks? That's what they're all doing it for, right? Not just for the joy or the love, but for the bucks. Doing it for the bucks, says the Rock Lobster. You're talking about joy and love, though. Maybe our next name will appeal to you. This is Meet Group Inc. No, not MEAT. That'd be cool, but it's MEET, group, like meeting people. Ticker symbol MEET, MEET. Trading today, $4.94, up about 40 cents, or about 8.5%. So a good name and good move in this one. If you're not familiar with this one, Meet Group Inc. is a portfolio. I like this description. It's funny. The portfolio of mobile social entertainment apps designed to meet the universal need for human connection. And don't we all really have that at the end of the day? They leverage a powerful live streaming video platform, empowering global community to forge meaningful connections, etc., so on and so forth. They have a bunch of apps people use to, shall we say, meet each other for casual chats, friendships, dates, and even marriages. I can go on. Instead, let's look at the stats. This is a name that does a little bit shy of 1,000 contracts a day. Today, doing about 4,000, and it's all pretty much puts, 12-1 puts over calls. So a little bit of the opposite. We saw some call love before in KKR. Now we're seeing some put love here. Maybe someone's looking to meet some puts. See what I did there? That was pretty savvy. It's got a total of, we saw a block going up earlier this morning, 2,050 of the OC 5 puts. So these are pretty much at the money puts. They were heavily in the money earlier this morning, going up for 40 cents, lifting offers on these bad boys 2,050 times. As the day has gone on, about 2x has gone up, close to 4,000 on the tape right now. They're off a bit. So this initial print, maybe he came in with more later to try to average down, because they're 25 at 35 now. So they're a good bit in his face as we're speaking right now. It looks about 1,600 open on this strike. So clearly opening paper, same deal. These don't have an earnings cycle in these because these are OC. The earnings is November. So it's not an earnings hedge. It seems like it's just a straight up hedge, or perhaps given the strike price, maybe a little bit more of a straight up spec, maybe a little bit more aggressive of a play. They don't really see a lot of in the money / at the money if people are looking to hedge, unless they're looking to get the heck out of Dodge, which could potentially be the case. Let's look here. A year ago, it was about exactly $1 lower. It was $3.95. Right now, $4.95. So it's been $1 lower. It dropped since then. It got down to, it broke the 2 handle back in April of this year. $1.87 it got down to, right around there. And then it's been on the rally ho mode ever since. Has more than doubled. Got up to 5 ever so briefly earlier in August there, 535. So kind of been all over the place here. Now it looks like Mr. Rock Lobster, someone is specking on the downside of that chart to the tune of a whole bunch of OC 5 puts. What's your spidey sense telling you here, sir?
I think they sold them. I think they posted the offer and sold them, and right now they're a quarter 35. Vol is down. Let me see. I just want to make sure I'm looking at this right. I believe I am. I am not high. Yeah, it's opening paper. Are you thinking line in the sand here?
You know, it would
10% of the value of the underlying.
Execution aside, that makes more sense. You know, the execution points you one way, but you're right. Nothing feels right about that as an opening buy to me. It's weird. The strike is weird. The percentage in the money is weird.
It's all weird.
Yeah.
Right?
So the only way any of that part makes sense is that if it's a sale. The flip side of that is, of course, the execution. But as we said before, it was actually, I noticed that it looked like a pretty tight, a nickel-wide market. This one seems kind of tight. So I wouldn't be surprised if there's a little bit of gaming going on where they post the offer and then get filled there.
Right.
Which wouldn't be the craziest thing. So, yeah, a lot of that struck me as odd when I was parsing this one earlier. But you got to read the tea leaves the way you see them. But, yeah, I like that. I like that maybe a little bit better. Let's go against the grain, mister. Let's do it. Let's say the hell with the print. Let's go with our gut. And the gut's telling you something's funky about these puts. Might be a sale. I think of the two, I think I probably would rather go that way. I don't know if I want to buy a 50, 45 cent put, whatever, on a nearly 10% of the stock. Not exactly my play. But yeah, crazier things have happened, sir, out here in Putland. Yeah, trading these rich options on a stock that's, 10% of the value of a stock is always a little bit weird if you are indeed buying these bad boys. You need a nice, of course, that chart could say otherwise. The guy could look at the chart and be like, you know what, these things are going downtown to Chinatown, and I'm going to ride it all the way down. So let us know what you think. You think that's a sale? That's a buy? We could see it either way. I think one thing points one way, a lot of other things point the other way. Let us know what your spidey sense tells you. As we go on to our final name here, I believe this is a newcomer. This is Delek US Holdings Inc., ticker symbol DK. Trading today, $44.34, as the Irish say, up nearly a buck, about 2.2%. This is a diversified downstream energy company, in case you're wondering. So no making love connections here, just energy. 1,100, almost 1,200 contracts a day, doing about 3,400 today. 25.5 to 1 calls over puts for our final name. Going to wrap it up with perhaps some more call love out here. In DK, a print of nearly 2,000 going up this morning of the OC 50s for 43 cents. This is a much more representative market, 25 cent wide market here. A couple cents off the offer here for these boys. A total, another 700 or so piling in after the fact. So total about 2,700 going up on the day. About 1,000 open on this strike. So it is opening paper. Earnings also on the 7th of November. So not an earnings play here either. And also doesn't look like any stock. So it looks like this is yet another one. Perhaps this is probably going to be on the buy-in side here. Let's look here at the chart, see what that says. Oh, another one that's been on a rampage. It was $25 a year ago. Got as high recently as nearly 60, 58 and change in the beginning of June. Then it's kind of dropped back down to 48, and now it's actually below that, now to 44 and change. So perhaps our friend here would not be too amiss in his aggressive projection for some near-term upside. Mr. Rock Lobster, what you feeling here? OC 50s upside call love palooza here in the odd block today.
Isn't this feeling kind of a bit of a bullish odd block today?
It does have that feel.
It's like a little, just every odd block has a feel. This is definitely, it's not feeling like a bearish odd block to me. It's feeling a little, there's people, a bull market. How do you know you have a bull market? People are paying the offer and buying calls. So I think, it's not that DK has anything to do with, missed the hookup site or KKR, but it is, you're paying little dollars for an October call in DK. I mean, that's bullish talk there. That's all I can say. On a 25 cent wide market, you want to buy those things. So somebody thinks the stock is going up.
That is a bold conclusion, sir. Bold. You're always on the cutting edge. Just just breaking, bleeding edge of options analysis. That's why we like you, Mr. Rocklops. Someday you'll get to the VIX zone -1. Meanwhile, we're going to get to you guys. It's time to open up the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's do some mail. Let's kick it off as we are wont to do with the question we like to ask you guys. This week's question is the heck with analysts and their outlooks for different names. We look at the actual flow, the actual options telling us what's going on in a name, where people are trading. This week, we're going to let you play along with us with a name a lot of you like to watch, which is SPY. What do you guys think is the largest open options position, at least as of this writing, which we did this earlier in the week? It could have changed since then. Probably not, but it could have a little bit. What is the largest open options position in SPY? We said, on your honor system, no cheating. Use your gut. What does your gut really tell you? Gave you 4 choices. The SPY March 255 puts, the OCK 272 puts, the DEES 31st, so end of year 320 calls, or the SEP 300 calls. I will exclude Uncle Mike because I may have whispered the answer to him yesterday on the advisor's option. Luckily, that show doesn't come out till after the poll is done, so I'm not too afraid of this. Uncle Mike, he'll have to be quiet for a minute. But Mr. Rocklops, you get to play. What is your guess? And more importantly, what do you think our audience is guessing?
Oh my gosh. Like how do I guess? What is the most
March 255,
you know what?
272.
Okay, this one I got it. You know what? Because Sebastian and I were talking about this, and I'm gonna say, because there's a huge 3,000 open interest in the SPX, so I'm gonna say the SEP 300 calls. No, the DEES 31st 320s.
See, even you're all over the place. Like our audience is kind of all over the place on this one. Excuse me. It's right now it's a tie between the OCK 272 puts and the DEES 320 calls, both with 32%. There's a couple of days left, so these numbers will probably change. 20% for the SEP 300s and 16% in the rear for the March 2 double puts here. Interesting stuff. I will not reveal the answer yet for you guys. I'll do it here in the chat so they can see the answer. But you guys cannot see the answer because we're going to talk about it tomorrow on Vol Views, so we'll save it for them. A little bit of a tease, listeners, as we go on to your questions. I won't say if the Rock Lobster is correct or incorrect. We shall wait, and I'll find out collectively. All right, let's see. Lots of good questions. Let's go fun. Let's go fun. Oh, here's an easy one, Uncle Mike. This is an easy one to kind of warm your whistle and kind of get you caught up here and get you going. This is a question from Gally, and I like this one. It's just so on the nose. He wants it, and that's what he wants. He says, I need an income trade that produces about 7 to 8% per year. What should I be looking at? So there you go, Uncle Mike. We need you to magically produce 8% a year from Mr. Gallion. What do you got for him, sir? Go.
Mr. Gallion, a couple things. In the words income, be very cautious when you are looking for an income trade that produces 7 to 8% a year. Income can be a relative thing. And what I mean by that is just because you're getting the income doesn't mean that it's necessarily a good trade. I mean, there are some oil stocks, or not oil stocks, but like some pipeline stocks that pay like an 8 to 10% dividend. But the problem is that they're very volatile, and you might end up losing 12% in the principal to get your 7 to 8% income. So be very careful of that. Now, with that being said, there are ways with which to do it. You can use sell premium. So like a very oversimplified way of looking at it. Let's say we went 1 year out on SPY. We went to September of next year, exactly 365 days away from right now. If you were to sell the 290 puts on SPY 1 year from today, the yield with which you would get on that, let's say that you're risking 290 because that's where the risk would be, but even it would actually be a little bit less than that. So what we do is we take 290 minus what the premium is on the puts, which is 13.8, and then that's 276.2 is what your actual risk is. And let's do 13.8 divided by 276.2. If you just want to sell a put 1 year out today with $3.40 of cushion, then you will get 4.99% rate of return. Let's say you get an extra penny on your fill. I'll give you that here that now that we're in fantasy land. You have the ability to get a 5% rate of return if the market just stays above 290 on SPY. Now, of course, if the market goes down, you're going to lose. You could easily lose more than that, but that is one way with which to look at it. Personally, what I like to do with income, I like to do kind of a mix to where I like to have people in income and dividend paying stocks, sell some out of the money calls on them, and then if we get called away, maybe sell another put to get back into it. That's probably my preferred methodology. And we call that the triple income strategy here at RCM, my parent company. That is how we like to do it. I like to look for high quality dividend paying stocks, sell some covered calls against them. And your yield will probably even come out annualized. Will probably come out to be even more than 7 or 8%. But you have to factor in the harsh truth that stocks don't always go up.
You're blowing my mind here, Uncle Mike. Stocks don't always go up. Dogs and cats living together, mass hysteria, craziness here.
It's nuts
on the old Option Block show. Mr. Rockloss, you probably get these guys floating into your chat every now and then. Hey, dude, how do I make 8% a year in income? What do you tell these people?
Not too unlike what Mike was saying. I mean, look at AT&T pays a 5% dividend. You can't sell a couple calls against that and make 8%. So that is one way. So you could also do a more aggressive strategy of selling, out of the money put spreads every week in the SPX, and you're always risk controlled. You're looking at your yield or the SPY. So if you pull up the SPY right now, let's say you wanted to buy 100 shares of SPY. So you're looking at SPY right now and you're like, okay, SPY. What do I want to do? Okay. But I don't want to risk all my money, right? So you can just risk some of your money. So let's say you're just like, okay, I want to sell the 293, 288 put spread for next week, which is just in the money, and that's going to give you a little less than 0.5% for just a 4-day hold. So now instead of putting, remember all if you bought 100 shares of that, that's $29,300, right? 10 shares would be $2,300. So if you just sell these weekly put spreads and you just keep selling them. If they go in the money, you just close them and you sell another one lower, and you just keep doing it. So if you want to do that, I mean, I don't know where you're going to end up with it, but that is a way to do it. But don't forget, you have some of your money is all, let's just call it 90% of your cash is sitting on the sideline. But how many of those are going to really work, and just hold them until expiration? So you can, but if you decide to, you can roll your put spread as well. So if you have a 4-handle put spread that you sold, you sell a 4-handle put spread the next time. You might not make as much money, but you still can make some. So if the market bounces, you're never risking more until the market actually comes back. So, I mean, the put selling strategies. I think the most important thing with them is, the risk mitigation. You want to make sure that you're keeping a bunch of cash on the sidelines, but trying to generate dollars. And then if the market really becomes what I would call an interesting purchase, then most of your cash is sitting on the sidelines, which is a totally viable solution to any, to a way to generate income. So, my rule is you don't want to really ever sell any puts anything or cash secured put for less than 1% per month in return, all in. You never want to be forced to close that, but you also, if you need to take delivery of it and sell calls against it, you have that ability. But, look at the pricing of just selling put spreads and having a routine if the market falls apart. You've got to assume that the market's going to fall apart at some point. And just what's your strategy? What's your strategy there to do that? So That's what I would say in that case. So you're looking at how those trades work out. You set up the time frame you want and your strategy for that, and on you go. So that would be, I guess that's two ways besides just something like AT&T, or in writing some at the money calls against that, or just out of the money calls, and looking to generate some dollars that way.
Mr. and Mrs. Gallion, look at you. Just an embarrassment of riches. You send in a somewhat on the nose, kind of silly question, but you get some good answers there. So there you go. Some great stuff. We got time for, let's do one more here. This is a fun kind of theoretical, not quite theoretical, but maybe 10,000 foot question. Sal Sott wants to say, pennies, exclamation point. Yeah, I'm with you. He says, did they help or hurt options? So kind of straight and to the point. I appreciate questions like that. This is an interesting question, I think, because there's kind of a couple different ways to look at it. We talked about this before, and a lot of people out there might, especially on the retail side, might say, well, it's no question. Retail pennies have been great. I could look at the prices I get. That's fantastic. I love my pennies. And I see where you'd be coming from on that front. And for a certain percentage of the names, let's say those top 50, maybe those top 100 names that are deep and liquid and for the most part do most of the options volume, yeah, pennies make a heck of a lot of sense in those because obviously there was liquidity to be found in between those nickel and dime spreads there. There was more to be had there, and people want to step up. Market makers want to step up and fill people. People want to get filled there. It's a win-win for kind of everybody. So that kind of makes sense. But once you get beyond that universe of that kind of front month at the money, top 50 names out there, pennies, different ball game. And when they first announced this and first launched this back over a decade ago now, it was called the Penny Pilot. It's supposed to be a pilot project to see how pennies fare in the options world and what impact they have. Decade or so later, guess what? It's still a freaking pilot, and they haven't rolled anything back. And that's what people are really looking for now. It's like, hey, it's clear and demonstrable now that pennies are not appropriate in a large number. Some might say the vast majority of options names out there. There's just no liquidity to be had in penny increments. We need to dial it back and at least give you a nickel. Go back to those old nickels, and what that does, listeners, is that gives the liquidity providers a little bit more cushion, a little bit more wiggle room. We said many times, these guys have been squeezed to death. It might be too little, too late. Most of these guys are already out of the business, and pennies are a big reason for that. Not the only reason by far, but they're a big reason. So it might be the damage is already done. I don't know if we can go back. If you go back to nickels, everyone's going to flood back into becoming an options market maker again. I'm not saying that. But at the very least, it'll give the ones who remain a little bit more cushion in some of these names that are just, if you look at them now, they're not quoting in penny wide anyway. They're quoting them extremely wide. So nickels would just kind of be a reflection of the reality in a lot. There are certain names where the options just should not be quoted in pennies. It's just too tight. It's too dangerous. It's not worth anyone's. And if they are quoting it, if you are seeing that spread, you can look at it. Oh, it's 3 by 1. And then a nickel or a dime wide, it's 50 by 100 or something. So you're not getting any real liquidity there anyway. So the whole thing is kind of ridiculous. So yeah, I think if I had to lean one way or the other, I would say pennies probably for a large part of the option market has actually been a negative thing, even though for at the money Apple, it's been great, and Qs and things like that. So it is a mixed bag, but on the net as a whole and the damage that has been wrought perhaps as a result, I probably might have to lean negative. Mr. Rocklaps, let's go back around the horn. Are you on that train, or are you going to take the counterpoint on the old SNL skit here?
No, you know what? To be honest, I think the penny programs and pennies for equities, that started the whole dark pool thing because nobody could get anything done. They post like 50,000 shares and somebody puts a penny bid in front of them. So they leaned on every order possible. And the same thing, I think, with options. Nobody's going to make a penny wide market. And when there's so much leverage in an option, it was, I think it's people come up with this idea that have no idea what trading is, no idea what liquidity is, no idea of any of that stuff. So they thought, it'll be great. But what happens is it just makes it easier for the algos to lean on something by a fraction of a penny. What the heck? You just made their job easier. And I think it spawned a whole industry. Like, wow, penny wide, cool. Well, now we know the kind of risk we have to take, and it was a lot less risk for people that have more aggressive machines, to lean on any kind of order flow. And then the dark pools came around because guys were just trying to get filled. All of a sudden, people wanted to post liquidity that nobody can lean on, which I thought was antithetical to the whole transparent market anyway. So it's like anything where people think it's a great idea. and everybody's worried about the average investor. Like, really, like the average investor is buying 100 shares, and it really just, are they really going to be freaked out if they're spending 10 cents more on 100 shares than not? It's totally stupid. Or would they rather have a market that, has some kind of liquidity? So I think for the average investor, it really didn't matter much. I think to the institutional investor that has to actually buy some kind of volume, it was much tougher, right? So they're going to get more liquidity by paying a penny more on their 100,000 shares. I mean, you're a market maker. You're like, oh, wow, I get a penny more for selling 1,000 contracts. Whoop-de-doo, right? Nobody gives a damn about that. So anyway, it's like anything. It's somebody changing the rule that actually does not know what the hell they're doing. So there you go. That's my opinion on that one.
Mr. Uncle Mike, are you joining the anti-penny train, or you deal with a lot of retail who might love it, so you could reasonably be on the other side. I wouldn't hold it against you, sir.
Well, from my standpoint, maybe I'll throw this back to you guys a little bit. What about on the very liquid names like SPY or Apple or GLD or something like that, where there's a lot of times that there is some pretty decent volume that is a penny wide. Now, for me personally, I guess it really doesn't matter that much to me from the standpoint that I'm putting in, as a trader, I'm putting in a limit order to get in. And if I really need to get out, I'll use a market order. But I'm doing it on something that's so liquid that it might be a penny difference in what I could have got filled at. So, I mean, it's, to me, as a trader, and I can see where you guys are coming from on this, but if you're using limit orders, I can remember 15 years ago, what I would do is if, like, let's say I'm looking to buy XYZ call option that's at $1 by $1.25, I'm putting in a limit order at $1.10 or $1.15 anyway. And if someone wants to fill me there, they can fill me. But if not, then, well, I don't want to get in on it. So I guess from my standpoint, I don't think it's much of an issue either way, but just I would be curious from you two former market makers, what would be your take on having penny wide spreads at the very liquid names?
Yeah, that's kind of what that's what I was alluding to earlier when in like the top 50 or so names, it makes a lot of sense. There's clearly liquidity there. But once you get outside that universe of the big popular liquid names, and even not even always in those, just in front ones at the money where a lot of the action is, then you're right. Then it starts to make less sense. But yeah, so that's why they call it a pilot. It's supposed to be phased in, and it's supposed to be applied on names where it's relevant, and maybe not so on the names that it's not. So if they wanted to do that, and I think that's what most people want. They want them to dial it back on the broad universe of options, so that people aren't being, the damage might already be done, but still, make those a little bit more viable to quote and trade in nickels. And no one's saying going back to, 16ths or anything crazy like that. Keep it in decimals. That's all good. That's a change for the better. But, keep it maybe in a relevant nickel and dime increment that makes sense for the liquidity of the name and the risk involved. Otherwise, you're just having people cause risk. Right now, the SEC kind of mandated this. They keep adding more names, and they don't subtract names, which is what everybody wants them to do. These names are not appropriate. Take them out. Leave in your apples, leave in your SPYs, leave in your GLDs. Go crazy, go to town, have fun. But the ones that aren't suitable, they probably should be removed. And it's been a big contentious thing, as you could tell, listeners. We spent a lot of time. That's on the one question. Who sent that in? Sal Sott. Good question. We could probably go on about this for quite a long time. There's whole conferences and debates and things devoted to this topic. Unfortunately, we got to wrap it up. It's time for our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Actually, we went so long on that last question, listeners. We're going to do a combo around the block and getting the heck out of here block as well, because we're past our time. Let's go back around the horn. Let's start with the Rock Lobster. If you got any final thoughts on pennies, have at it, sir. And then what are you watching for the rest of this week into the weekend? And then third question, what's coming down the pike in the land of the pit? Lots to answer, sir.
Oh my gosh, what am I watching? I am just seeing how high we can go, seeing if the VIX keeps on, and seeing how the market prices kind of the election. What's going on land of the pit? We're having Made Easy series. Look for my new adjusting trade series, my vol newsletter. Still rocking. All that stuff is still going. Surf on over the pit if you want to do some learning. Also, you can check out my blog a few times a week. It is free. Go to the website and check it out. People seem to like it, and that's it.
There you go. That's it. OptionPit.com. Check out his newsletter. They just had their options or something made easy the other night. So check that one out if you want to get it over there in the webinars section as well. I think it's archived now, so you can check it there. OptionPit.com to learn more. Mr. Uncle Mike, same question for you. If you got final thoughts on pennies, have at it. B, what are you watching for the rest of the week? 2. And C, what's coming on the pike in the land of St. Charles Wealth, a.k.a. the land of the fox?
For sure. No further thoughts on pennies. In terms of what I'm watching, like Andrew, how high can we go? I think the next key point of resistance will be the 300/3000 level for SPY, SPX, but we will see. It could be right now. We could have had the all-time highs earlier today. Who knows? Coming up at St. Charles Wealth Management, I am going to Duke University to speak on October 10th. The sign-up is live right now. Go to my Facebook page. Just type in St. Charles Wealth Management on Facebook. It's in the events section on there. You can sign up for it to make sure you reserve a seat because there won't be many left pretty soon now that we're broadcasting it out on this show. So if you're in the North Carolina area, make sure you come and check it out. We should be back there by the time everything dries out. But as of right now, from everything I'm told, Duke's in good shape.
There you go. Check them out, stcharleswealth.com to learn more. Click on the Fox for hidden Easter eggs and surprise goodies. All right. He's going to have to put that on the site now because I keep saying it. All right. And on behalf of Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you for downloading, streaming, subscribing. For those of you listening live, waiting for TWIFO, we're going to be back in about 25 minutes with TWIFO. We won't be broadcasting in between, so go take a break, go to hit the restroom, get a beverage, have some lunch. We have some guests coming in the studio next. We have to reconfigure a little bit, so we'll be back live in about 25 minutes for TWIFO, talking crude, talking crazy, more about that crazy gold trade that went up last week. We got Uncle Mike's colleague over there, Matt Bradbard, coming on to talk some oil. We got equities with FTSE Russ, all kinds of fun stuff. Volatility. You like volatility skew, all the other, plus some gold and other fun stuff. Crypto micro crash this week, getting into it. So stay tuned for that. TWIFO coming at you live in about 25 minutes. Otherwise, if you're subscribing on the old podcast, just sit back and enjoy because you probably got it already. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.